In high seas or calm, both opportunity and risk lurk just below the surface. Answers require in-depth analysis. Welcome to Blackfin Group's Shark Cage podcast.
Good day, folks, and welcome to the Shark Cage Blackfin's podcast series. My name is Keith Kemp, President and CEO of Blackfin. I'll be your host today. To start, I want to thank our sponsors. A real special shout out to all of Blackfin's preferred partners, Finastra, Cloud Verga, Take 3 Technologies, Lending Pad, and today's special guest, Prudent AI. So let's get started, folks. I'm really excited about today's conversation as we sit down with the one and the only Paul Gigliotti. Paul is head of growth and partnerships at our preferred partner, as I said, Prudent AI. Welcome to the Shark Cage, Paul. Great to have you today.
Thanks, Keith. It is so great to be here. I'm really looking forward to this conversation.
Cool, man. Well, now, before we jump into some of the questions I have for you, Paul, I would like, if you don't mind, just take maybe a minute to share with folks, our listeners, a little about your background in the industry. I mean, I know it, but I think it'd be helpful for people to have that in perspective as they hear our conversation today.
Absolutely. And I'll try to go as quick as possible. I have the very fortunate experience of covering the entire gamut in the mortgage lending industry. I started out as an originator for Freedom Mortgage's very first net branch on the West Coast. And, that quickly grew. And then we had our financial crisis. And at which point in time, and I get a lot of hems and haws, I did an exit and I worked at Cisco Systems in their investor relations department. And, Keith, that's when I really found my love for technology and realizing the importance of how innovation is what's at the forefront and the technology is a tool to support that innovation. I reemerged in the mortgage lending industry and supported a couple of small brokers or small lenders move through the ranks, if you will, all the way up from being a broker or a small lender to direct to agency, increasing revenue and headcount and business channels within organizations. I was most recently COO of Pinnacle Home Loans, where I had a great pleasure of working with a fabulous team up until the current downturn. And then that organization happily went and became part of Mason Mack, Chuck Iverson's group, which is another fantastic organization.
Amen to that.
Yeah, and so I just started to kind of reach out to people that I knew in the industry through my nonprofit, Access 360 Lift. And other organizations, and was very fortunate to stumble upon Prudent AI. Jay and Shri are the co-founders of this amazing platform and technology that I feel really aligns in ensuring that the team members of a lender's journey is authentically aligned with the journey of the consumer. And for me, that's very top of mind awareness, and it's something that's very important. I learned it first from the one and only Sue Woodard, a dear friend of mine and board member of my nonprofit, when I was implementing Total Expert. And we really honed in and focused on using that CRM tool to ensure authentic journeys for all that are involved in the transaction. So that's one of the biggest passions and benefits that I see with Prudent AI. I would be remiss if I didn't also note that I love my career. I'm dedicated to the industry, but what keeps me going and keeps me running, Keith, is my husband of 14 years and my 9-year-old son and my 6-year-old daughter.
No,
so that's me in a nutshell.
No, I love it. I love it. And family, I always say family first. So, but it's certainly a challenge to reinvent over the years in this industry. But that's what I love about the industry as well, right, Paul? I mean, the ability to be able to take on so many different opportunities and leverage different experiences and skills to be able to help move other companies forward. And I think that's where our synergies have aligned from day one, is that we love helping organizations be effective in their implementations and actual adoption of technology so that they can really run more efficiently and realize the ultimate ROI of any kind of emerging technology like a Prudent AI. So you and I could probably talk for days on that, and maybe we'll schedule that as a follow-up call. for another day.
So
But
we could create a series, right, Keith? Part
yeah,
one, part
seriously,
two.
I'm okay with that, man.
Yeah.
Be honored, be a lot of fun with you. So, Paul, let's jump into some of the questions that I had,
Okay.
just to kind of peel the onion back a little bit more on the what you just touched on, which is that emerging technology. You know, the in how the industry. I mean, we live in a very antiquated industry in many ways. And I always say, and educate my clients on the fact that, what we do is hard. One single US loan transaction requires the single largest data set to complete a transaction in the world. So leveraging some emerging technology isn't an easy consideration, particularly upon implementation. They can see the value and the quick hit value of it. Oh, that's cool, that's great, but how do we actually implement it and really optimize it? So you've witnessed the evolution of the origination world, obviously firsthand with your background, but what is the most significant challenge facing the industry today? And how do you think and believe that emerging technologies can really revolutionize the way we tackle this issue?
Yeah, that's a loaded question. And I think first and foremost, an industry is an industry is an industry. You have a product or a good that is created and you provide it to the consumer. With your data set, data that you provided, Keith, the housing industry is a little bit different than other industries.
Yeah.
And I think the reason why it's so different is because um, it has so many data sets. There's such a large emotional part to it. It's the consumer's largest investment. It's heavily regulated, and we've got this huge wealth gap that we're trying to bridge. So we do have a couple of things stacked up in the industry, and I wouldn't say against us because they're all learning lessons. But if we step back and take a look at our industry, I think the challenges facing our industry are very similar to any other industry. Um, at a simplistic level, and that's keeping up with the requirements of the consumer while keeping our costs low and our production high, right? So that's a basic formula any company and any industry looks to do: cost
Yeah.
low, production high, and then what does the consumer want and need in order to buy our product or service? And the
The
housing
formula
industry,
for success right there.
yeah, absolutely. And in the housing industry, we have to maintain and oftentimes enhance that very important recipe of creating authentic growth opportunities for all involved in a very relational driven transaction, back to that emotional part. So the trick is we can't get using the spicy analogy, we can't get too
Yeah.
spicy with the technology, but just enough to provide that growth, excellence in service, and
Mm.
efficiencies that provide a true impact to the bottom line. And so, yes, the emerging technology can revolutionize our industry if used properly, because we've all seen far too many times the arrival of this great technology in the organization or in the house. But without adoption or integration, it falls flat, not providing any benefit while driving up costs. So right now, I think our industry, the technology is about efficiencies and expanding the credit box and supporting the consumer where they are. So I think that first and foremost, if we can utilize our technology to follow that simple process of creating efficiencies, expanding the credit box, and supporting where the consumer is, I think we'll find a whole slew of consumers that want to be homeowners. I think that will utilize the technology efficiently to do what it's supposed to do and drive down cost and increase that experience, that authentic experience.
Oh, I love that. And it's funny. It's something just resonated with me as you were talking about that, in how lenders need to be looking at this, and that you led with this potentiality that we have some overdevelopment in our industry, and that you got to be careful not to try and bite off more than you can chew, right? When it comes to innovation and trying to do too much too fast, where
Yeah.
the industry is not ready and there's so many integrated data points that are impacted. You just reminded me of a focus group that I recently was hired for by another vendor, and basically the room full of mortgage bankers from all walks of life were basically said, we need to be better buyers of technology. We keep running out to the new shiny object, but the fact of the matter is it really didn't bring much value, or we sacrificed quality and in customer service for just being able to speed up maybe aspects of the loan. And so we keep sacrificing things that we shouldn't be sacrificing on in the name of a new shiny object. So we need to be better buyers in our industry. Would you agree with that?
Oh my gosh, absolutely, 100%. I've done consulting and fractional work with lenders that are so focused on bringing in production teams. And let's say they're shopping for a new technology, a new CRM, and the response is whatever that team is that we want. What CRM do they want? Okay, that's the CRM that we'll get, right? And oh my God, that cringes me, because it's like, if I want a new car, well, I'm not going to go out and buy a Porsche. I mean, that would be insane for someone with two small kids and two huge dogs, right? I'd never use it, right? So you've got to just be really, responsive and forward thinking in the technology stack that you're building out. It's about strategy. It's about looking at where you are now and looking at where you want to be. And then, that golden rule of efficiency, from my perspective, expanding credit box, and then supporting the consumer where they are. The consumer is not who it was even 10 years ago. It's completely changed.
Very true.
So the technology that's out there in our space, I'll mention the word AI. The technology that's out there gives us the ability to do all that. So you made a great point, Keith, when you said the shiny object. Please, it's not about the shiny object. I mean, every technology solution provider in the mortgage space does great marketing, and gets themselves in front of who they need to be in front of for their customer, for vendor selection. But it's what works for your organization and who your consumer is and where you want to go.
I love that.
So that's a great point.
Well, let's build on that part of our conversation. So, what do you believe is really the most exciting potential? I mean, we're talking about emerging technologies, talking about being responsible buyers, talking about the intricacies and challenges of integrating and actually revolutionizing, the way we do business today and have historically done it. So, but let's talk about what's the impact of the potentiality and the impact of these emerging technologies on the future of the industry? How do you see these emerging technologies really reshaping the landscape in the coming years? I mean, you're flirting with this discussion around being able to expand your credit box. So maybe that has something to do with it, and maybe Prudent AI is a great example of how that is, as one example. But how do you see these emerging technologies really reshaping the landscape in the years ahead?
Yeah, I do. And so what I want to be very cognizant of, Keith, that is a great question. And I don't want to come across as a commercial for Prudent AI.
No,
However, that's who I'm representing. And that is part of the reason why I'm so honored to be a part of such a great organization, because it does have to do with their solution. And it does have to do with how their solution, from my perspective, in a roundabout way, very much expands the credit box. We're in an industry that is about opportunity. That's what our industry is about. We create opportunity. We offer opportunity to the consumer with home ownership. We create opportunity internally with our teams and with other solution providers. I believe the technology can and should be able to harness that opportunity and create those conduits in bridging the wealth gap to those dedicated, hardworking Americans that want to be homeowners. I hear continuously on a day-to-day basis with my nonprofit and other organizations that I get to have conversations with, and listening to consumers about the dream of home ownership is still very much out there and very much alive, regardless of generation. And I think where technology comes into play with this concept is supporting the housing industry, again, in meeting the consumer where they are. I just said at the beginning, or just a few minutes ago, the consumer has changed greatly just in the last 10 years.
Yeah.
Their desires, their needs, how they make their income, and where they want to live. And we need to make sure as an industry we're paying attention to that. I have some stats that floored me in preparing for the MBAF conference that I was at,
Mm-hmm.
on a panel that I sat at. And I just want to share those stats real quick. So
Yeah,
according to
please.
Statias, in 2023, 73 million Americans made 20% or more of their income from the gig economy. That's
Wow.
estimated to grow to 76 million Americans in 24. So that means, that stat alone means 70. So how many potential homeowners in that 76 million are there? And how many current homeowners in that 76 million are there, right? That are making income from what other is not necessarily transferable to
Or
an
traditional.
agency, a traditional financing. Exactly. Um, According to Bankrate, 43% of Americans that own a home have a side hustle. So 43% of Americans that have a mortgage currently now have a side hustle.
Staggering statistics.
Isn't
Wow.
that huge? So when you
Yeah.
take a look, when we sit back and take a look at that, and so we're talking about the need for the society, American homeowners, to be able to tap into their equity. It's unfortunate. Most of them have a lower rate, but we've got this huge dichotomy between the national consumer debt being so high and home equity being so high because nobody's refining. That's going to go away once rates start to level out a little
Yeah.
bit more.
Agreed.
So what's going to happen to those 43%, that 43% of the Americans that have a side hustle? We've got to figure out a way to support their qualification based on multiple types of income. And so I think that it's just such a vast difference in income type from before, really requiring lenders to conduct a much deeper dive on precise income analysis. And this is where I'll sound like a commercial for a second. That's where Prudent AI comes in, right?
Right.
With our income intelligence platform and being able to do 100% accurate income analysis within seconds, to be able to provide lenders with an understanding as to this individual can afford this mortgage, and here's the proof for that. Here's the data source for that.
Wow.
And I think it's really important to realize that AI solutions across the board can support these needs higher, with greater level of efficiencies and accuracy and quickness than the human touch.
Yeah.
Now,
Well,
I'll preface that, Keith, with AI by no means should replace the human, but at Prudent AI, I call it the cape to your superhero costume, right? So you as an individual, as a team member, can support production, can support operations. Let AI do what it should be doing, and supporting, leading the industry and reshaping the landscape of the industry by implementing those efficiencies and cost savings, then thus allowing humans to focus on the relationship aspect that's needed in an industry that's about opportunity.
Yeah, I mean what I hear you clearly saying, which I've always been trumpeting with clients and my entire team shares with our clients is AI shouldn't be about taking over jobs, it's about reallocating resources to do what they're good at. Instead of you sitting here and doing some income verification, should have a tool like an AI, like a Prudent AI that does an automated, bank statement analysis. Instead of you doing that, you can spend more time on the customer
Yeah.
and having a deeper relationship with them so that you can earn their business again once the transaction is complete, or they'll trust you further because you developed a deeper relationship as hiccups happen within a mortgage loan transaction along the way, right? They trust you because you spent more time on the relationship rather than more time on a bank statement analysis.
Yeah. Oh my gosh. It's so funny as you were talking, Keith. All of a sudden, I visualized, I wish that we could have a survey on this podcast.
Yeah.
And I'd love to see how many production people would rather have an underwriter spending an hour and a half doing a bank statement analysis versus calling them up, an underwriter calling up an originator or a branch manager and saying, we have a slight issue with this file. It's not working as it's structured this way, but I was able to sit back and support you in restructuring it. And if you restructure it this way, all will be well. Same down payment, same rate, et cetera, et cetera. Which one is more viable to the growth of the organization, the production team, and the consumer?
I love it. I love it. No, we're on the same page. I couldn't agree more, man. I agree with you that this isn't to be a, infomercial around Prudent AI, but Prudent AI is proving as really, I think what we're saying is the ideal use case to basically demonstrate to lenders today and challenge lenders to start thinking more about our economy and more about where buyers are at and where their income is coming from. Think about the society out there that is looking for future home ownership, and then think about what are those tools that are going to empower you and allow you to effectively underwrite and approve and fund those loans so you can put people in new homes, right?
Yeah, absolutely.
So
100%.
we need to be more strategic as executive leaders within this industry and think not just reacting to the phone calls or the emails that come in asking for a loan application, but we really need to be more proactive to be able to capitalize on that changing market out there by leveraging emerging technologies like this. So
Yeah.
I love it. All right, so let's talk about that for just a minute. So there is this speculation about AI taking over jobs. I believe you've heard some conversations along these lines when I think you were recently visited the legislative day. What are your
Yes.
thoughts on that? Do you think evolution of advanced AI systems will replace jobs in the lending market? I mean, can you expand a little bit more on that?
Yeah, I mean, it's interesting that sometimes fear can get in the way so aggressively, right? Like, fear of technology taking over jobs. I don't want to age myself too much, but I remember when the World Wide Web, e-commerce hit, and my gosh, it shattered the retail world. At the time I was working in retail, and the scare was we are all going to be out of jobs. Now, the retail world has changed a little bit since e-commerce exploded. And sure, there's probably less um, gross profit from a retail organization, um, a brick and mortar,
Hmm.
and maybe a little bit more profit in an e-commerce for that same type of organization. And now that brick and mortar, what it really is a brand name awareness, right? But it didn't cripple anyone. And in fact, it probably, created more jobs along the lines. If we go back to, I think it was 1997 when Fannie implemented DU and Freddie Mac implemented LP.
Hmm.
Some say that's AI. Some say it's a form of AI. I don't necessarily know if it's AI because I don't see the learning intelligence in AUS per se. But
Sure.
regardless, when that system came out, um, I heard, I was not in the industry yet, but I heard that the talk around the town was there's going to be no more underwriters. Like all underwriters are going to lose their jobs and processors are going to lose their jobs. Is that,
Oh,
can
what a
you?
great example. Oh,
Yeah. So it's all fear-based. And so I think, we have to live in the space of being optimistic and, to your point, Keith, being innovative. And this industry is relationship based, right? So it requires the human touch because of that opportunity. It requires the human touch because of that emotion. And every position from the originator to the lock desk to the underwriter, that's required. And so um, will AI support greater efficiencies? Yes. Will AI decrease costs? Yes. Can we ensure that consumers' nerves are calmed, or walk a consumer through the benefit of a variety of loan types? No, AI can't do that. Will AI support the originator in understanding how to restructure a loan so it gets approved or clear to close? No. So I think it will have its place. I mean, it's, artificial intelligence. To me, what AI is above and beyond software is that intelligence is data, and you take that and apply it to make it better, to make the process better. So Prudent AI is a great example of, we go through what we call our 3X factor, and part of that is X-ray. So we do a fraud check, right? That fraud check isn't really part of an income analysis, but because we have the data and the intelligence, we can add that in. So to me, that's what AI is. And so it's not really gonna take away jobs. I think what it's gonna do and what it should do is allow individuals to really do their job. Because, for example, of Prudent AI, who really wants to sit down and do a 24-month bank statement analysis in Excel?
I remember
Right?
those days. I remember doing that
Yeah,
myself back in the origination and branch operations days. Oh,
yeah. I mean,
nobody wants to do that.
it's not fun. Like, you don't learn anything really. Maybe how to use Excel a little bit more. So, it just goes back to, I think it augments the power that the team members have, and it gives them more ability to conduct their function at a higher level. It supports their function.
Yeah.
And I think if we sit back and look at it with eyes wide open and opportunity, we'll utilize it properly. There might be some lenders out there that try to alleviate much of their operations staff, and I feel those lenders might find some issues with that, but I don't think it's going to take over jobs.
Yeah, I tend to agree with you, Paul, wholeheartedly. I think lender. So one, first and foremost, you touched on it there initially, is the fear. It's the fear factor, and nobody likes change, right? I mean, as a change management expert, I'm constantly teaching executive teams how to guide their teams through change management, and because they have to adopt some new way, process, or technology, or compliance requirement, etc., and it just becomes very challenging for anybody to really perceive what's going to come out of this. Is my job at risk? And I think that comes back to leadership effectively guiding people through the process of adoption and utilization, and teaching them how we're going to optimize your time now that you have a little more efficiency, so that we can increase our customer engagement, our internal relations, and quality. So it all goes hand in hand. Not enough we'll be able to cover in this short little podcast, but I think you've hit on some really critical points that folks need to be aware of. Paul, this has been absolutely insightful and a great conversation, great advice for mortgage executives in the industry. Any other, final words or parting, recommendations for folks to be thinking about when it comes to emerging technologies and their path forward, and especially in a market like this?
Yeah, I think it's well, first of all, thank you for having me on your show. It was great conducting this with you, Keith, and working with you. My last parting words is if there's opportunity out there, and there's opportunity to create efficiencies, and there's opportunity to have fun with your work, and get back to our purpose, and that's not to use the word again, opportunity, but providing that opportunity to consumers and our team. And so do it with eyes wide open. Don't do it from a fear base. Do it from love and compassion and a desire to be successful. And have fun with it.
Couldn't have been said any better, Paul. I mean, just and a great message to executive leaders today to be more purposeful and meaningful and have fun. I like that. I think we could all use a little bit of that today. Executive leaders, you heard it here from the Shark Cage. Paul, I'm so glad we had you on. You heard lenders how critical it is to adopt meaningful emerging technologies, have fun doing it. I encourage you to start today by learning more about what Prudent AI is doing by visiting www.prudent.ai. Until next time, thank you. This has been another exciting episode in the Shark Cage. Make it a great day.
Thank you, Keith.
Thank you for joining us in the Shark Cage. To be a guest on a future episode, send an email to info@blackfin-group.com. To find out more about the show or the information provided in this episode, visit Blackfin Group online at www.blackfin-group.com.